Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is July 17, 2023, and I'm going to go over your three threes for the week. I'm going to go over our top 10 major asset classes, their performance, and how we are positioned on a short-term and intermediate-term basis. Then I'm going to take a look at a chart of the S&P 500 on a short-term basis and look at the support and resistance zones. And then I'm going to go over the top three market movers for the week. So let's jump on in.
Okay, let's go over the top 10 major asset classes, their performance, and how we're positioned on a short-term and intermediate-term basis. We did have a nice week in the equity markets last week, so a few things turned bullish on the short term. The small caps, the world, emerging markets, and gold all turned bullish. Short term, we still have the US dollar and aggregate bond as our two bears on a short-term basis. Zooming out over 3 months, the US dollar switched from a bullish stance to a bearish. Aggregate bond remain bearish. Gold and commodities remain bearish, while all the equities remain on the bullish side. Okay, let's look at the S&P 500, the chart on a short-term basis. And as we keep saying, we started adding back here at the end of March. So far, so good. It's been a straight line up 13.4 since that. That's most of the gain that you've seen this year started here in March. But let's take a look at the support and resistance zone. We are in this support and resistance zone here, which is the resistance zone started 43.40 to 45, just 10. And so we're butting right up to the top of it. So we'll see if we can hold that or if we can come back down. My guess is as we go through earnings, we are going to either test the bottom of this resistance zone or even come down and test this zone to make sure that we do have support down in these levels. So we shall see over the next few weeks as earnings come out. So anticipate a little volatility over the next 2 to 3 weeks. All right, our top three market movers for this week. Tuesday, we have retail sales, which will give a little signal, a sign on how the consumer is doing as far as spending is concerned. The projections are likely to have risen 0.5 for last month, which is an extension of last month's gain, but year over year, they're only up 1.1%, which is the smallest annual increase since a decline early in the pandemic. So even though consumer spending is a big portion of GDP, it's showing that even though there seems to be a lot of spending out there in the form of travel, it's not in other areas. So we've got to keep an eye on that. Tuesday, Wednesday, Thursday, it's a big housing data week. So we're going to get some info on how the housing data is looking. Tuesday, we get the NAHB Housing Market Index. Wednesday, we get new housing starts and building permits. They're about 1.45 units and 1.49 units for the building permits. That's about in line to slightly lower. On Thursday, we get the NAR existing home sales figures, and they're projected to have fallen to 4.23 units from 4.3, and a lot of that, again, has to do with the possibility of them raising interest rates later this month. And that also, for the third market mover this week is earnings, and we're getting a lot of them. It's the start last week. They had a few at the end, but this week is a busy week for earnings. We get Bank of America, which will be key to the banking sector and our interest rates affecting the banks. Morgan Stanley, Lockheed Martin, Tesla, Netflix, IBM, Goldman Sachs, Johnson & Johnson, and United Airlines are the big ones for this week. All right, that's it for this week. Thank you for joining us. Our next update is Monday, July 24th. As always, continue to subscribe, follow, and like, and we shall see you next week. Have a great week trading.